Welcome to TradeTheMBA.com. This is John. This report is for the 3rd of May. And like I mentioned yesterday, not to get too excited about movement in price back, higher from its open, despite the wick, because we had continuing declining shakeout and otherwise fairly weak readings from at least a DOC standpoint. Nothing spectacular one way or another. But sure enough, we came right back to revisit the lows. We're still above the red line on the extreme histogram, which means you're not getting a full distribution, but we had the previous move here, which suggested that we would revisit that. I'm not a big fan of the huge wick thing saying that you have to get down to the bottom, but we got a couple of confluences that are right about in this range, which was 2616. Possible we get there, but the more consistent would have been where the open is when you get a long wick, particularly when it's more than a third of the candle. That being said, it's still in line with modestly okay. You still have green above red. The problem is you have the red trailing and moving back in, maintaining this lower zone, and that's critical from a strength build-up situation. Just don't have the impact power. Plus, we've never gotten a reset of the steel, which is problematic as well. And that's why we're in this malaise. No different here on the NASDAQ. It's priced a little better as far as performance goes, and it hasn't dipped as much as the S&P has, particularly when it came to this dip below the red line on the extreme right down here. Which would match right over here. We've stayed above that fairly healthy. And it also had a much better reset with orange and everything to really propel the fact that it's maintained a little bit stronger readings. And everything's stronger. You have the red zone much higher. So NASDAQ, a bit healthier. This Euro cascade certainly puts a lot of pressure on the S&P because, as we said, a lot of the earnings come from there. And what it really appears like is just that at this point, the central bank was okay with the fact that the euro was declining in this particular case, since we're really still continuing to see solid growth in the U.S. and their earnings with tax reform have been fairly healthy. I just don't think they needed to prop it as much. Plus, as I've been pointing out for some time, the EU, despite what everyone's claim was, is not doing all that spectacular from a growth standpoint as well. So there's no impetus that the EU is going to have rates rising, which means that it's becoming more and more attractive in the U.S. with the potential of higher rates and higher inflation, which should be driving this much further down, much faster, but that's okay. It doesn't always go as quickly as you want. With this previous dip right here, just below the red line, and we would expect that we're going to revisit that on a complete sub-configuration. Right into this up move here, a pivot down, though, could actually produce the little higher spike. So not completely dead yet there from a treasury standpoint. And part of that is just because they're not seeing it, the inflation, again, this whole point of full employment. Not necessarily true because you keep adding people and it's not causing wage spikes. And oil maintaining itself, and that's going to probably be pretty consistent as long as the Iran situation and that, but really I think that has more to do with the limitations on production, and that are going to keep things pretty stable, which is healthy for oil companies and investment and a lot of other things, that it's not so exorbitant that it's going to impact the economy. And gold continuing to stay in the doldrums here. A little revisit of this low could satisfy that dip below the extreme. It looks like we're headed for the potential for a buy signal within this configuration there. So let's turn to the intraday action. We'll go back all the way over here. Enlarge it just a little bit for the fun of it. So we started out with this bizarre move of the orange, indicating that we had significant algorithm activity taking place right within this configuration. It caused a little bit of a dip and pretty immediate, that falling orange is typically bullish. It's the rising part that gets a little bit shaky. And then we had some kind of soft, and I want to show the difference between these two short configurations here. Difference being is that you still had the sign, and if you're looking at this real time, you don't know how dramatic that's going to be. Here, you actually still have red declining from 288 to 355, and cyan rising above it, green going below. And the difference between this one and the one over here, which is the one I took, which was, despite the price, it's not really relevant. It wasn't that much of a move difference. If we look at the closes right there, 53.75 versus 54.50. So 3 ticks. I mean, this is not crazy time. But the difference in the steel location, one coming from more reset, the other coming from high or, up, trailing lower, meaning that short-term buyers had been more exhausted at this point than they were at this point. It's not critical. You could be at either one of them, but this one just takes, you'd enter this and you'd feel like, oh my God, I'm going to die, because it's like going straight up from the peak there. Of course, that bar doesn't finish there and then comes across, and then you still have continuation of the declining everything, and then the strong DOC spread leads to, full reset. And mostly what this was calling for was this dip that I didn't even mark right here, which I really should, because it was significant in my mind as far as leading me to wanting to short this as soon as the opportunity exposed itself, was this dip below the red line right here. Again, the big wick issue, but needless to say, filled it to the T. And in the meantime, filling it created a new distribution point. So any signal for buying right at this particular point knew that it was going to be met with short-lived bounce and probably would make the lows. So I didn't have to cover until this bar right here, which was after you had the nice little orange dip, then you ended up with a little reset right there. And this wasn't particularly expecting anything strong from it, because again, you didn't have complete reset of the orange, and you got to see the green then take over, plus steel all the way up here was high, and so we saw a couple of situations where it broke into its short configuration right here on the snake, early one, with green also just about to trail below red, at least heading in that direction. It could have bounced from there, so it wasn't super strong from a short standpoint, but needless to say, you had the exact snake description with the tongue in and the steel falling and orange rising, and it caved a little bit and just pretty much came across. I think you had a stronger setup right here in this one, where you have red going down, the green below, and the clear snake signal, and that one produced a much deeper drop. And then you ended up with this interesting series of dips below the red line right here, and it became significant because in the buy configuration, which took place right back here, it accelerated quite a bit, but got overdone to the point where it became a nice DOC spread right at the same time the Azure. And this happens quite frequently. You get that kind of reference, but lower red, green below, cyan moving up, an orange above the 13.5. And what's interesting about this one, as long as that orange stays above that 13.5, continues to be in a short, even with the bullish configuration of the steel rising right there. The biggest question mark is going to be, when did orange turn up? And as soon as orange turns up is when you actually get the real dive, and certainly cascading. Then we ended up getting more distribution, and I mark them with these dotted lines so you can see from a reference point. I've thought about creating either a show me or a even just on the regular program, where at least it will follow these and just put a dot underneath where they are. As long as they're within the Fibonacci range, it won't clutter the chart at all, but it would be cute to be able to see those, and every time they got hit with a lower that, they would be deleted as a segment, which I thought could be interesting. So I'm going to look into doing that, but I wanted to get the paint bar coloring. So this becomes significant here as we ebb lower into this, and we start. When that happens, you tend to get more reset buys, and it's like, okay, well, which one do I take? Well, I'm certainly not going to take the one where I've got a dip below the red line that just took place. fine, I might see a small pop from there, but unlikely to have much strength. And in this particular case, where does that buy take place? Well, it takes place not until this dip right here of the orange, which is taking place on a dip below the red line. So, okay, you know that one isn't. And then we turn into the white candles, which produce absolutely nothing because I'm not getting any dips of the cyan here to the negative 7.5, which would really produce this signal right here, which is more your buy configuration. And in this particular case, dip of the orange here is going to produce a little bit more upside activity, except for, likewise, again, another dot setup. But you can see the dot setup came right here. We've already filled it. So the return to the lows was already met in this bar right here. And what was that low? 24.25, and we hit it to the tick. And it's a crazy thing, but a lot of these you will find will hit just to the tick in more than enough cases. And what that usually tells you is that they're poised for reversal, simply because when you've reached them to that exact point and you didn't find additional supply to break below, that's when they usually reverse and reverse pretty strong. So it's a natural market dynamic. You're looking to see if you take these positions, whether or not there's going to be additional supply that really wants to get out of it, whether you've reached a point where there's a bunch of stops that generically people want, and you want to hit those to suck up that volume. And it's quite effective in this particular case. They found a release point right here, and we just cascaded lower. Didn't produce much of anything. And this is pretty consistent with what we saw a couple of days ago. Same situation where there was just no closes above the 23%. And that becomes pretty strong to see when it stays that way. I know there's sometimes a reluctance, but a lot of times you really just don't get an effective, it's like here, we didn't get an effective buy signal until over the 23%. We don't have control over that. There's some that come in really clean, that had potential, but you got to look at that extreme on those cases just to see if you've got a point where that's continued distribution taking place versus something that's rising, or in this case, getting close to overbought and not even reaching the 23%. That's also a warning sign as well. Well, nice to go over those details, but anyway, I was busy working on a lot of the programming during some of these shorts, and I didn't post much, but I'll probably put the new charts for the coming day here. So as always, trade well. We'll talk to you later.